Equity Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. If you are joining us for the very first time, welcome and thank you for becoming an Equity Mate. If you're still getting up to speed with the basics, you can go and check out our Get Started Investing podcast. But my name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. I'm excited for this episode. We have a new expert, an expert we haven't had on the show, talking about a new company. Well, not new, but new for me. One that I haven't heard of before.
Yeah, we love it. We've had great feedback from the summer series, and we're going to deep dive into one company in this episode. And it is our pleasure to welcome to the studio Stephen Arnold. Stephen, welcome.
Thank you, guys.
So Stephen is Managing Director and CIO of Aoris, a single fund of 15 highly profitable market-leading global businesses, one of which we're going to crack into today. Stephen has been investing in offshore markets for over 28 years with previous roles at Evans & Partners, Goldman Sachs and Platinum Asset Management. So plenty of experience. Cannot wait to get stuck in.
Yeah, now, Stephen, we're looking at one company today. The company is Tractor Supply. It's listed on the NASDAQ with the ticker TSCO. Now, as I said, I hadn't heard of Tractor Supply before we came across you and you suggested it. So for people who are new to the company, tell us about it. What does it do?
Well, first thing is what it doesn't do. It doesn't sell tractors.
Busted.
So if you turn up there expecting to get a new ride-on, you might be disappointed. So Tractor Supply was founded in 1938, and they have 2,100 stores across America serving professional farmers and hobby farmers. And if you go onto the website, you'll see that they're for the people that love the life out here is how they define themselves. And their customers come to them to buy pet food, livestock food, workwear, tools, agricultural supplies.
No tractors.
No tractors.
Feels like they should get some tractors in there.
I did see that that tagline, like the life out here?
The life out here.
Yeah, I just like, it was a real emotive thing. I was like, if I was a farmer, if I was living, in a rural area, you'd really resonate with that over like a Walmart or something.
Yeah, and that is so powerful because their customers come to them feeling like I'm in a store, I'm buying stuff from people that get me. And that's where I think they're an advantage versus retailers that sell the same stuff, but they do it everywhere. They just don't get that emotional connection with their customers, and they really work hard to feel like we get our customers. The people that work in our store have horses. They go to the same schools as our customers. They understand your needs. That's part of the secret sauce, if you like.
Yeah.
The scale of American retail businesses always blows me away. 2,100 stores. I think Woolies here has about 900 or so.
Yeah, I think it's cracked 1,000. Has it? Yeah, and then
potentially
Coles is around 800 and something.
But we had someone on talking about Chipotle, and they're saying they're going to roll out to like 5,000 stores or something. Yeah. It's ridiculous.
one on every street corner.
Yeah. Pretty much. So, Stephen, sort of very high level, like what's the thesis and why Tractor Supply? And then perhaps we'll dive into specifics around financials, management, and those sorts of things.
Look, I think there are three things that for us make it a special business, and we're always looking for special businesses. And I think some of them, if you thought in Australia, well, I know what Bunnings does, and that's pretty special. If I could just buy Bunnings, that would be an amazing equity investment. And there's a lot of commonalities when we talk about Tractor Supply, so it's a good sort of mental model. So the first thing is scale. They're 10 times the size of the nearest competitor. The second is customer service and customer connect, if you like. And the third thing is its track record. So just a moment on each of those things. By being 10 times larger than their nearest competitor, it means they get better deals from their vendors, so they can deliver better prices. Everyone likes that. And two, when things are hard to get hold of, which has been a common theme the last couple of years, they get preferential access to scarce stuff that goes on shelves, and customers like that. I've driven all the way to the shop and I don't want to get empty shelves. And the third thing, it allows them to invest in their infrastructure and their e-commerce. You can imagine if I'm a little hardware store down the road from Bunnings, I probably don't have the world's best e-commerce site. So that's where scale is hugely beneficial. And on the customer side, as Ren, you said, part of what makes people like shopping there is that they feel that they're walking into a store that gets them, and their customer satisfaction scores are very, very high. And through the pandemic, they hit record highs. That's a good sign. And when we come to the track record, they've increased their sales for 30 consecutive years. Quite remarkable.
Wow.
And through all that, there's been various agricultural cycles. There's, of course, been economic ups and downs and all sorts of very ebbs and flows along the way. But through all of that, every single year has been a record year. Amazing.
Yeah, that is fascinating. One thing we're always interested in, there's thousands of listed companies in the US. I think 40,000 listed around the world. There's just, your universe is so big. How did you come across Tractor Supply?
Well, sometimes you can do financial screening, and that can unearth, businesses that exceed a certain level of profitability, show businesses that have grown over time in a way that we're looking for, and often speaks to a successful business, that growth over time. Show me businesses that have a capital structure that doesn't have too much debt in it, which is certainly the case with Tractor Supply. And then it's just wide reading, or sometimes it's traveling through America and you might see something interesting. And a few years ago, I did go into a Tractor Supply store and had management walk me through, and this is what we sell, and this is why people like coming here. So there's a few different ways you can discover these. But I think what's really helpful is having a pretty clear idea of what you're looking for, and that's certainly the truth for our style.
Yeah.
So let's focus in on the financials, because a lot of investors, that's where they start, and we've got data galore. So when you're looking at the financials, income statement, what sort of stands out to you? What excites you about it? Can you just talk us through it?
So the business has got a market capitalisation today in Australian dollars of about 40 billion. And so in a global context, that would put it broadly in a mid-sized company. Its profitability last year was about $1.4 billion in terms of its earnings. Its profit margin, so every dollar of sales converts to about 10 cents of pre-tax operating income. And so in the context of retailing, that's pretty good. And that's been very consistent through time. We like retailers where it doesn't sort of ramp up too hard, because that might make you nervous that maybe that's unsustainable, nor do you want it going in a negative direction. So this consistency through time is a really healthy sign. And in terms of they've been able to grow their stores at about 70 per year, or 3 or 4% new stores every year. And they've done that. Their growth has been primarily through just opening new Tractor Supply stores rather than acquiring businesses that look like theirs. And that organic growth avoids a lot of the problems that might come from retailers buying other retailers, where your systems are different, your culture's different, your merchandise is different. So a long track record of successful organic growth, consistent high levels of profitability, and a business that is of a size where they can keep growing for a long time.
So when you talk about those profit margins, we looked at post-tax margins, and I think it was around mid-sevens post-tax. And, for comparison, Walmart is mid-twos post-tax. US Coles is mid-fours. I think Home Depot is pretty strong there in like the 10%. But, the sort of mid-7% post-tax is really good for a giant US retailer. And then I guess the question is, when you look at that and you think about sustainable competitive advantage, because some companies have strong profit margins, but they'll be eroded over time by competition. And then other companies have sustainable competitive advantages and they'll keep that profit margin. What gives you confidence that Tractor Supply is in the second bucket, not the first?
Yeah, well, it's such a great question, because the world's a competitive place, and if you've got something special, and someone else is always trying to take your lunch, if you like. So I remember a few years ago when Woolworths, in joint venture with Lowe's, created the Masters business, and I thought, okay, look, here's a serious...
What a success that was.
For context, Bryce worked at Woolies when they did that.
Okay.
Yeah. No. I came into Woolies when it was up in flames.
Oh, right.
So I had nothing to do with it.
So at the time, look, there's probably no more serious competitive threat here than a combination of Woolies, who knows the Australian landscape, and Lowe's, who knows hardware retailing. And the fact that they packed up and left and shut it down after a couple of years is probably the strongest testament that you could possibly get to Bunnings' strength. Now, likewise for Tractor Supply, in the last 30 years, both Walmart and Home Depot have both had a go at let's create a rural retailing concept to directly compete with Tractor Supply. And in both cases, they packed up and shut it down. And in the subsequent years, Tractor Supply has continued to take market share, and they took a lot of share through the pandemic. They've won a lot of new customers. Particularly interestingly, the profile of the new customers is a bit younger, more female demographic, slightly closer to urban centres than they have been before, and they've kept most of those customers. That's a really good sign. And we like businesses that have a high retention rate of happy customers, and the customer satisfaction rates have never been higher. So they have more people spending more of their monthly shopping, if you like, with Tractor Supply, and they're happier than they've ever been. And the Tractor Supply's market share continues to rise. So that gives us a lot of confidence that the business is pretty durable. Now, we'd be concerned if you felt that, well, they're a bit arrogant. They feel like they might take their foot off the gas. But as we see where they're investing, we're pretty confident that they want to continue to invest in the stores, deliver value for their customers, and keep widening that gap versus competitors, rather than giving any sniff for competitors to catch up with them.
You would have to be a pretty brave retailer now to say Walmart couldn't do it, Home Depot couldn't do it, but we're going to do it.
Yeah, that's it. And sometimes I think, look, if I was the guy down the road from Bunnings, life would be pretty tough.
Yeah.
And every year it gets a bit tougher because they've got all the advantages of scale, e-commerce. And I think that's same is true of Tractor Supply. But it's a good thing that they know that life is competitive, and like with Bunnings, everything that you can buy in a Tractor Supply store, you can buy somewhere else. So if they're going to get people through the door, they know that they've got to deliver value. They know they have to invest in the stores. They know that they've got to keep finding new ways to deliver value through. And they had a very successful loyalty program in the last couple of years.
Yeah, let's talk about that, because I saw that when we were researching the company. 28 million Neighbours Club members.
Yes.
28 million, that's
More than Australia.
Meaningful,
More than Australia, yeah.
And that's a meaningful percentage of the US population, especially for a rural-focused retailer.
Yes.
Yeah.
Well, it means that Tractor Supply now knows more about their customers than they did before. That's really valuable. What are people like, and when do they shop, and what are and it might inform their decisions about what else can we put on the stores, and but it also means that customers feel like they're getting rewarded for their loyalty. So it's been a real winning initiative.
I'm just having a look at your portfolio, Stephen, and you've got at least 5 out of 15 stocks are retailers. LVMH, L'Oreal, Tractor, Costco, Nike. So there's probably a question at the end, why retail? I love retail, by the way, so good to see. But when
not all of those 5 companies are...
But you know what I mean, consumer products.
They all have stores.
Yeah, consumer products. When you're looking at, well, for us sitting here thinking about assessing financials of retailing companies, are there specifics that you look for on a balance sheet, on an income statement, different to perhaps tech companies or other industries that we should be keeping an eye on?
Yeah, well, for those sort of retailing or consumer businesses that you mentioned, I think broadly we know that the consumer is tough. Consumers' preferences change. They're always looking for something new. If you're selling through supermarkets, if you're a Procter & Gamble or Coke, then the supermarket's got a lot of muscle to push back on pricing and so on. Life is tough for most consumer-facing businesses. So we're looking for something special and something that's been evidenced over a long period of time. So those businesses you mentioned, Costco is another. It's got a retailing concept that's got quite differentiated features. It's a membership model. It's been very successful in many countries, including Australia, and we feel like there's something very durable about that. In the case of Nike, business has been remarkably successful over a long period of time, and it continues to grow share in the face of changing consumer preferences and competition. They continue just to get bigger and more successful. And likewise, the LVMHs and the L'Oreals have something very durable and very special. And when we can see that management's hungry to keep investing and pull away from their competitors rather than take their foot off the gas and let competition catch up. So tough selling to consumers broadly, and there's many well-known consumer businesses that you will never see in our portfolio, but the ones that are there because they're special attributes.
Yeah, some very high-quality businesses there. So let's talk to one of the key differentiators when it comes to these tough industries like consumer, which is the quality of management. So you mentioned that you've met some of Tractor Supply's management when you went to the US. That's unfortunately a luxury that a lot of retail investors can't enjoy. So I guess tell us about management. What were your impressions, and how do you keep an ongoing finger on the pulse and continue to assess them?
Well, in the case of Tractor Supply, they introduced the first external CEO in early 2020, right before the pandemic began. So it's sort of a pretty tough time to get dropped into the CEO seat. And Hal Lawton came from Home Depot, which I thought was a pretty interesting background. He was head of merchandising and head of e-commerce. And I think what's been really valuable for Tractor Supply is we do lots well. We've got a lot of long tenured management, but we could also benefit from some new perspectives. And so a few things that he's brought to the business are, let's invest in our e-commerce proposition. Let's make it really good. And it's been very successful. So about 10% of the sales are now e-commerce. But as you can imagine, a lot of pet food and stuff you buy there doesn't lend itself to being dropped at your front door. So 80% of that gets picked up in the store, and lo and behold, oftentimes people will go into the store and buy other stuff when they do that. So e-commerce is one. Knowing that you've got to keep investing in the stores to make it a good environment for people to shop in. So he's putting quite a lot of capital into, let's refresh the stores, make them look nice and make the layout easy to navigate. And the third thing he's done is on the land that Tractor Supply sits on, only about half of it is occupied by the store. Well, what can we do with the other half? What they're doing is a garden centre. Now, what they first thing is before they decided to do that, they asked their customers, what's the one thing that you'd like to get from us that we don't currently supply? And garden centres was the number one.
It wasn't tractors? Must have been a close second.
All this land out there, we can put stacks of tractors. That would make a lot of sense. The customers said, we like garden centres. It's been remarkably successful for Bunnings. I know that we go there as a family, once a quarter, and then you walk the aisles and you buy a bunch of other stuff you never thought you needed at the same time. And so for Tractor Supply, that's a really smart way to use that extra land, and it brings in customers that may not have otherwise shopped there, different profile of customers, gets people shopping more regularly. So that's been a really beneficial, fresh perspective for the business that he's brought in, really energised. But what he has doubled down on is that customer connect that you mentioned before, Ren, that we love outdoors, we love the country environment, and we want people to know that we love what they love, and that really solidifying that emotional connect with their customers has been really a strong message from the top.
One takeaway that I'm taking from this interview, and an interview we actually did yesterday where we spoke about another US retailer, Floor & Decor, is that Home Depot seems to be a real training ground for retail CEOs, because Floor & Decor also has an ex-Home Depot executive who's now their CEO. So it's similar to Tractor Supply.
Yeah, look, I think Home Depot has been remarkably successful. No doubt there's a lot of executives there that feel like my path in Home Depot is going to be limited. Where else can I go and get a very senior job? So it certainly worked for Tractor Supply.
So just to kind of close out on the management piece, what are some of the key resources that we can use as retail investors to keep abreast of what management are doing? Like, there's the earnings calls, there's the report that they put at the top of all of their annual reports as well. What do you use outside of flying and speaking to them directly?
Look, I think in the same way that I think what we'd be very sensitive to, or what we're sensitive to, like, is any departure from what works in ways that might upset customers. So retailers that start to get a bit aggressive on price, we could charge 5% more for everything, and would people really know? And over time that they will know. So if your proposition is we want to put high quality goods on the shelf at good value prices, and you start to get a bit greedy. Number two would be just not investing in the stores. It's like any building, over time they just get tired, and the retail environment will suffer. And with Tractor Supply, as I mentioned, that they're really pushing a lot of capital into improving those stores. And number three would be the people. It's a really key part of a shopping experience is the quality of people. Are they enough there? Are they motivated to service the customers, help you navigate the store, checkout queues and so on? So you can read the transcripts and the annual reports, but the shopping experience, if you're a local investor in Australia, you can going to be pretty close to the action when you walk into a Woolies or a Coles or a JB Hi-Fi or any other listed retailer. I think those three: is the store fresh? Is it well serviced? And is pricing starting to feel a bit no longer good value.
Well, Stephen, we are about to chat about competitive threats, risks, and the future of Tractor. But if you're sitting at home and really enjoying what Stephen is saying, the good news is that we found out just before we kicked off this interview, Aoris is about to be listed on the ASX in a couple of months' time to give retail investors access to the concentrated portfolio that we're talking about now. So, Stephen, do we just keep an eye on the website? How do we? What's best for our listeners if they want to know when it's listed?
I think if people keep an eye on the website, we're currently expecting in April or May for unit trust to be accessible via the ASX. So the website's the best way to keep abreast of that.
Awesome. Well, we'll put a link in the show notes to the website. But we're going to take a very quick break and on the other side start having a chat about the competitive threats and risks and, as I said, where the company is going. All right, well, we're chatting with Stephen Arnold, Managing Director and CIO of Aoris. But before we get back into it, a reminder that if you're interested in upskilling and learning more about valuation and how to apply it to your investing journey, we currently have $100 off our Value Investor Program, an online course that we've developed with Owen Rusk that'll teach you everything that you need to know about the basics of valuation. Great course, Ren. Use the code MATES at checkout for $100 off. Link in the show notes.
How good?
How good?
Well, Stephen, let's get back to Tractor Supply and I guess we've spoken a little bit about competitors. You know, we've spoken about Walmart and Home Depot trying to muscle in on this space. Seems like Tractor Supply has beaten them back. So I guess the question is, what keeps you up at night when you're thinking about this company? What competitors make you worried, or just generally what makes you worried?
I think the few things we'd look for are online. Is a natural competitive consideration, if you like. There's lots that we can buy on Amazon and other places as well. Unfortunately for Tractor Supply, just the heavy nature means that delivery costs are always going to be an impediment to making economics work well. So I think that's the Tractor Supply business is pretty well positioned for that. But what online does is it does provide price transparency. We're going back to the issue of pricing, and in order for a retail concept to be durable, then price has got to stay fair and competitive. And it's a lot easier for people to know, well, I can buy this at Tractor Supply, but what are other retailers charging for it? And in a way that pre-internet, it just wasn't as visible. So that's one. I think we'd be nervous if we felt that management was suddenly trying to get to the destination fast, if they got a bit impatient, and if they can keep opening 70 stores a year on a base of 2,000, that's about 3%. That's pretty manageable. But if you tried to do 200, then the staff required to make that work is going to get pretty stretched, and problems are more likely to happen. So the steady nature of growth, I think, is key. Impatience would be a problem. And then also, in a tight labour market, your staff and keeping them in the store motivated, happy is important. So the wage rates is important. We know we're in an inflationary environment. We know we're in a tight labour market, and Tractor Supply, I think, has got to be to recognise that and make sure that their wage rates keep pace with what competitors are offering.
How have they been able to manage inflation over the last couple of years? Well, 12 months.
Look, they've done a good job, and there's a lot of retailers where I think two problems have happened. One is that you haven't got stock, so empty shelves, and then customers are disappointed, they go elsewhere. Or two, suddenly supply chains ease up and you've got too much stuff, and then you've got to clear it, and that's costly. And Tractor Supply, perhaps leaning back on the advantages of scale and their logistics infrastructure network, have struck a good balance. They haven't had too much or too little. That's been key. And then in terms of price inflation, they've done a good job of passing it through without being aggressive, if you like, and not looking at, the cost of this product is up by 10%, but we can charge 12% more and get away with it. I think that mindset that we're here for our customers is important. Working hard, using that scale leverage to push back on your vendors to try and get the best deal possible and passing on what you need to pass on. And on that, they have about a third of what they sell goes under their own private label brand, and that's a big advantage because it means that if vendor number one isn't coming to the party, then under your private label brand, you can deliver value. You can change the manufacturer of your private label brand. There's a lot of advantages that come with having an established, trusted brand, and that's important in areas like livestock and pet food and apparel. They have that private label brand, which in an inflationary environment is an extra tool in the toolbox.
I guess zooming out from Tractor Supply and just thinking about your portfolio as a whole, we've just got through earnings season. Seems like earnings season never ends in the US. But what are you like? What's the general sentiment that you're hearing across your portfolio companies? Because it felt like last year, there was a lot of inflationary pressures in transport, and then we saw like commodities like lumber and energy and all of that stuff. And now is it labor? How sticky is it? Just generally, what sense are you getting across your portfolio at the moment?
I think across our portfolio businesses, the outlook for 2023 is okay. There's no business we own today that we expect to earn less this coming year than they earned last year. But I think for the economic picture, perhaps the economy will grow, but the pocket where it grows might change this year. I think the housing market's one big part of the US economy that's going to maybe be smaller this year than last year, and the spend through retailers like Home Depot will reflect that. And we've just gone through a couple of years where people have spent more than normal on their home, and then you come out the other side and naturally people spend a bit less. But what they are doing more is that they're travelling more. Maybe there's hospitality's benefiting from that. The employment market seems pretty healthy. Unemployment rates close to a record low. People are getting paid more, but where they're spending money is changing a little bit.
All right, so that doesn't seem like
bull market's back.
Everything's burning down. Yeah.
I think that's the key. So there's always going to be. I think the key message that we've been learning through the last year or so is that the better businesses do a better job in all of this. So Tractor Supply is going to navigate these challenges better than their smaller peers. I think L'Oreal in their market's doing a better job than their smaller peers and taking share. So look, that's our overarching principle: own the best. And we're not interested in the second best at any price. It's the best or nothing for us.
Yeah.
It is a very simple statement, but it really sums up a lot of investing. The better businesses do the best.
Yeah, like I think that's it served us well, and it's probably been really valuable through the pandemic. If you go, like I think good times, of the analogy I use, if I can share that with you, is a couple of mornings a week I might go for a bike ride before work, and when you're going downhill, everyone's going downhill pretty fast because the hill's doing the work, and that's like good economic times. Everyone's doing pretty well. But when you're going up a hill, the stronger riders really pull away, and then you can see who's best, and that's very much the case in tougher economic conditions. The better businesses pull away from their peers in ways that aren't so obvious in good times.
Just to touch on Home Depot, as we said, we had an interview yesterday about floor and decor, and it's just constantly a company that comes up as like the number one threat for all of these more, I guess, niche retailing businesses in America, but it's also compared to Bunnings as one of those just amazing retailers over in the States. Is there a reason that it's not in your portfolio? Like, how do you, if it's such a great business, what are the reasons that it's been excluded?
Only owning 15 businesses allows us to set our quality and price criteria very, very high. So there's lots of great businesses that don't just fit into the portfolio today based on what else is there. And perhaps it's not the best time because of valuation, or there's just better opportunities. So it's a business that we admire. They've done a fantastic job the last decade. While perhaps Lowe's has struggled, then Home Depot has pulled away, but it might be that Lowe's gets their act together and provides more effective competition to Home Depot. So there's lots to like about it. For us, the best 15 businesses just don't include it right now.
Yeah, fair.
I was actually listening to a podcast this morning talking about, this has become a Home Depot episode. They were talking about Home Depot's report, because I think they reported this week or late last week. And the share price fell about 6% on the report. So it was a bit soft. Yeah.
Okay.
One of the advantages that within our portfolio, the other retailer that we own is Costco. What makes them, one of the many things that makes them perhaps attractive and effective is that they sell lots of stuff. So Home Depot is a bit of a narrow business where it's very much serving home construction, renovation, and DIY and so on, whereas Costco, as people spending shifts away from buying barbecues to buying something else, then through their store, they can just reposition their merchandise to where the customer dollar has been, and that's been really effective. And that gives us confidence that while pockets of the economy like the housing market might ebb and flow, their business is much broader, and it allows them to navigate those fluctuations in different sectors more effectively than a narrower business.
And one thing that will never change with Costco is the $1.50 hot dog and Coke combination.
That's right. That's right.
The best thing about that business.
That's right. The pizza slices are the $1.50 hot dog combo.
Yeah.
That's really integral to the ethos of the company.
So as we get to the end of this interview, we really want to finish with a conversation of where Tractor Supply sees itself going, and if the management can execute well, what this business looks like in 10 years. Is it just that consistent organic store growth? Is it new concepts? Where the management team today talking about where the business is going to be in the future?
Look, I think the next 10 years will be more of the same. That's what we want to see, is let's open another 70 stores a year, and there's lots of America where there's big geographic regions, they're not well represented. So there's plenty of room for growth. But if it's measured, if it's thoughtful, then that will work well. Continue to invest in the existing stores such that more customers want to spend more money there. And let's think about what else we can offer customers. I think a good retailer has what I call optionality with customers. If people trust in a Bunnings, there's lots of stuff that Bunnings can sell that might seem outside of the, if you like, the DIY remit. But people come there, they trust that you're going to put good value in front of them, and they'll buy all sorts of a wide variety of things. So for Tractor Supply, garden supplies is one right now, and there might be other categories that they can successfully utilise that customer relationship. One of the other advantages that they've got versus other retailers is just proximity to their customers. They kind of act as a trip consolidator. In order to, if I wasn't shopping at Tractor Supply, I might have to go to 3 other stores to get all of my stuff. So they're saving people time and travelling and gas cost, if you like. So there's more things that they can put in their aisles that save customers from travelling somewhere else. That people are really willing to entrust Tractor Supply with their dollars. So I think sort of consistency, investing in the stores, finding other ways that they can serve their customers will mean, I think the next 10 years is going to look a lot like the last, which means sales grow about 8% per annum, pretty consistent profit margins, and maybe that translates with share repurchases to EPS growth of 9 or 10%. And if they do that, that'll be a great outcome for shareholders.
Great. Well, Bryce and I are actually going to be in Nebraska in a couple of months. We're going to Warren Buffett's annual meeting.
Oh, fantastic.
And I assume there's a few Tractor Supply stores across Nebraska, so maybe we'll have to pop into one. Yeah.
Maybe we should try and visit all the American retail companies that we've spoken about.
Sure.
Floor and Decor.
Yeah.
Chipotle. Anyway, there's heaps. Stephen, thank you so much. It's been an absolute pleasure. We've taken a lot out of this interview. It's been fascinating, great sort of insight into how you think about not only Tractor, but just broadly approaching retail companies. It's been really good. We do have one last question. Every year, Equity Mates holds the Equity Mates Awards, where we sort of recognise platforms, products, and people that are contributing to our community. As an expert, you are now in the running to win this. Anyone who appears on the show default entry. At the end of the year, our community vote on who they think was one of the most enjoyable and valuable interviews. To help them with that, if you were to win, where would you put the trophy? The trophy looks something kind of like that. It's a glass thing.
Maybe tucked behind the books on our bookshelf somewhere.
Not on public display. Interesting. No, we do appreciate it. So thank you so much. If you're listening at home, a reminder to keep your eye on the website as Aoris is listed on the exchange in the next few months. We'll put a link to the website in the show notes. Please rate and review Equity Mates Investing Podcast if you can. It goes a long way to helping us get in front of new people on the charts, and we really do appreciate getting your feedback. But Stephen, thank you so much for the interview today. We really appreciate your time.
Thanks, Bryce. Thanks, Ren.
Thanks, Stephen.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.